Good morning, everybody. This is Pope Binary here, and today I want to give you all a video on the best candle formations. And in my experience, these are the formations that I rely upon. I am a 5-minute trader on the Nadex platform, and I find that these candle formations are consistently tried and proven, and I'll bank on these candle formations almost 100% of the time. And before I show you these candle formations, I just want you guys to keep in mind that a candle formation is it's just that. It's just a candle formation. Out of context, a candle formation will not work, right? They have to be at certain points in the market. And along these lines, no candle formation works 100% of the time. Just because you see like a dream setup, don't just bet like 50% of your account, because there are all sorts of freak shows in which the market will actually turn against you. And so obviously in a candle formation, if you have stronger candles, meaning if you have like strong pins or strong engulfing candles, these will make the formation stronger and more reliable. And so let's jump right into it. I've got 4 patterns I want to teach y'all today. I've mentioned these in other videos, but I figured I'd just make a combination of all of them for you guys so you can understand them. So this one is called the spike and ledge pattern. And what it is I've got a black here. Oh my gosh, I don't know if you can hear, but outside my dorm, all my friends just got back from the game and they're drunk as all get out. So what we have here is we have a support level that's established. We see a huge spike, and I'm talking, if you see this spike, this candle will generally be like in 1 or 2 candles, and it will shoot way above the current value. So then what you'll see that there's a pullback, and then the market will try and test this value again, this horizontal line. It'll test this value on 3 separate occasions before right, so it'll bounce back down, and then it'll bounce back up. And then after this third candle, if you see the market plunge like this, if you see it plunge, you'll generally see a sort of a pullback right here, there'll be a support and resistance level, and then there'll be a huge engulfing candle, bearish candle going back down to the established value that was established over here, if that makes sense. So this horizontal line here, that's the established value. And let me see, I think I've got an example for you guys on the daily chart here on the euro. So I've got to zoom out a little. It's right here. You see this? All right, so right here what we have at this horizontal line right here, there was a clear moving average, right? This is what the market would the value the market was staying around. Then all of a sudden we see a huge spike upwards. So this is the first top of the spike and ledge. The second top is it's right here, and then the third top. For the third time, it tried to push above this horizontal line and it failed. And like I said, there's a little bit of support right here before the market just crashed it downwards. And so that's the first example. This is called a spike and ledge pattern, and I find it to be very reliable. This one I covered pretty extensively in another video. This is called a double top or double bottom strategy, and what it is if you have a large market that moves upwards, oh man, my computer's freezing up here. You see a support line is established up here. Oh my gosh, my computer freezes up here. A support line established here. It doesn't want to break this value. Generally, if you see, my rule of thumb is if you see 3 candles down and then there's an immediate bullish surge, but then the candle gets rejected again, like the market does not move above the value. If it gets rejected again and you see a huge bearish candle form, then that's a strong indication that the market's going to continue falling. And the way I distinguish this pattern from this last slide, the spike and ledge pattern, is generally double tops occur after a large move upwards, whereas a spike and ledge pattern, it kind of looks like something like this before falling, if that makes sense. And so obviously the inverse is true for double bottoms. It's just this pattern but backwards. And let me see if I can show you all a couple examples. They occur all the freaking time. Like, this pattern happens so often, and it's really, really reliable, I found. So let me see if I can find a good double top. All right, here's a double top right here. God, my computer, it's so slow right now. I got so many programs running. So at this orange line, this value right here, see how the market pushed up? It touched this value, got rejected. It ran up, touched this value, and then a bearish candle formed, so the market consequently fell. And for 5-minute trading, this especially works on the 5-minute charts. These happen all the time. Let's see if I can get an example for you guys. But they're consistently running. Like here's a double bottom here. The market pushed down. It touched this value, got rejected, came all the way back up, and then this candle dropped all the way down, and then there was an engulfing candle before the market rocketed upwards. So this is just another example of the double top, double bottom strategy. So that's the second candle formation I want to show y'all. This one is called a head and shoulders pattern, and basically in a chart it looks something like this. And this line right here, this is called the neckline. Holy cow, my roommates are drunk as hell right now. They're banging on walls, slamming doors and shit. All right, so right here what we got is we got an upward moving market. We got a consolidation, then we've got a huge spike upwards, and then if you see there's another rally upwards, but it doesn't break the neckline, and you see a bearish candle form, you can generally assume the market's going to fall. I always wait for this is called a confirmation candle. I always wait for the confirmation candle to happen because otherwise the market could just continue shooting upwards, and then you just lose money. Always wait for confirmation. And let's see, there's a great example of this on the Euro chart on the daily. Right here. You see right here how there was a large move upwards. This would be the first shoulder. The two individual spikes right here, these are called shoulders. These are the shoulders of the head and shoulder pattern. So there's a shoulder here. The market pushed higher, fell down, it rallied back up. Here's the other shoulder at this orange line right here. This was the support line, and then when I saw this bearish candle form right here, I would have bet down and I would have been right. So that's called a head and shoulder pattern, and obviously the inverse is true for I don't know what they call it, but the inverse is true. If you see a large bearish move, if you see something form kind of like this, then generally you can assume if the neckline is not broken or whatever, and an engulfing candle forms right here. Holy cow, I can't. I'm literally trying to draw right now and I can't because my computer. You can assume the market's going to go up. This is just the inverse of the head and shoulder pattern. And the last pattern I want to show you all, this is called a cup and handle pattern. And basically, I've already highlighted this. If you see a bowl formation, you can generally assume that the market is going to fall back down if you see this confirmation candle. Now, something I want to point out, you as a trader, you can wait for this for what I call the pullback. Generally, if you see a cup and handle forming, the market, it'll look something like this. It'll crash down, and then there'll be at least one attempt for the market to rise again before it continues downward. Dude, what's going on? God, that guy was so drunk. And so, generally, you can just assume that that pullback is gonna happen. God, that was so funny. What I was just talking to, one of my drunk ass roommates just walked in. It's not his room. He can't even see straight. All right, so a bull pattern happened. You could argue that this is a bull pattern, but for me, this isn't a clear U shape. For me, a more a clear shape would be right here. And like I said, depending right here and then right here. And generally, you can just assume that the whatchamacallit, if you see this confirmation candle, you can assume the market's going to fall. But like I said, watch out for these pullbacks, because a lot of the times they will actually bite you in the ass, because it'll fall down, then it'll come back up before continuing to fall. So just watch out for those. Depending on your type of trading style, you can wait for those or not. I generally don't wait for them because in the short period of 5 minutes, if you see this candle right here, you can generally assume that it's just going to continue downwards. And a little bonus here, there's actually, I think, a double top forming right here. So if you watch the charts open on Sunday on the USD chart, if I see a bearish candle form after this candle right here, I'll go ahead and bet down, because I think that's a double bottom forming. I've actually got it in one of my notes. I've got that's written down. So this is just Pope Binary with another video. Subscribe for more. I'll keep you all updated. And try and use these formations in your own trading style, because for me, these are the most reliable strategies. Catch you on the next video.